Hello and welcome to the day ahead. It is Friday, June the 24th. I'm Andrew Gagan. Well, let's take a look at what happened overnight. Wall Street closed higher, driven by gains in defensive and tech stocks, countering declines in economically sensitive groups. Utilities, healthcare and real estate, again among the top performers as investors search for safe havens. Stocks specifically, the usual suspects, Amazon, Microsoft and Apple gaining, as the benchmark US Treasury yields fell to two-week lows, supporting tech and other growth stocks. Meanwhile, ExxonMobil and Chevron dipping below 3% as energy stocks lagged in trade amid growing concerns of a global recession. And those prices continue to slide along with the price of oil. Taking a quick look at the retail sector, Nike and Walmart were among the top performers for the Dow. Nike has confirmed it will fully shut down operations in Russia following the country's invasion of Ukraine. The company is saying its priority is to ensure we fully support our employees while we responsibly scale down our operations over the coming months. The company joining McDonald's and Starbucks, which suspended operations in Russia in recent weeks. Well, the Federal Reserve's commitment to tackling inflation is unconditional. That was the testimony Fed Chair Jerome Powell gave to the US Congress overnight. He reiterated the need to restore price stability because without that, he said, we're not going to be able to have a sustained period of maximum employment where the benefits are spread very widely. The central bank's preferred measure of inflation is running at more than 3 times its 2% target. Meanwhile, the Fed's latest stress test of the largest US banks has found they would remain well capitalised in the event of a severe economic shock, paving the way for them to issue share buybacks and dividends. Globally, more evidence that manufacturing growth is slowing as China's COVID curbs and Russia's invasion of Ukraine disrupt supply chains and feed into inflation. The US flash June PMI surprising to the downside, with manufacturing and services indexes both falling, noting a decline in demand causing new orders to contract for the first time since July 2020, although the survey suggested that pricing pressures may have peaked. Initial jobless claims in the US fell less than expected last week to 229,000. In the Eurozone flash June PMIs, they've softened, with activity falling to the lowest level in 16 months, while there was little change in UK flash PMIs for June, although new orders are down. And US Treasury yields have fallen to two-week lows as the market prices in the growing likelihood of a recession brought on by aggressive rate hikes. And the major currencies were mixed against the US dollar, the Aussie dollar having moved back above 69 US cents. So to the local share market, which is set to open marginally lower this morning, with the ASX futures down just over 0.1%. Oil prices continue to fall as investors become more pessimistic about the prospect of a global recession and weaker demand for oil. Brent crude off 1.5% to $110 a barrel. However, iron ore has rebounded following a pledge from Chinese President Xi Jinping to take more effective measures to achieve the country's economic and social development goals. And those growing recessionary fears have seen copper slide more than 4% to a 16-month low, while tin continues its precipitous fall, down another 6.7%. The gold futures price, that fell 0.5%. And crypto assets stabilised overnight, with Bitcoin managing to move above 20,000 US. And this morning, Reserve Bank Governor Philip Lowe will participate in a panel discussion about inflation and global monetary policy challenges. And that is your day ahead. We'll see you again Monday.